No, generally a bottom, and I've seen this movie so many times before, is you need a big institution to go bankrupt. That always helps. I mean, you have to sacrifice an institution to get this to work because then you get a dramatic flushing of equity positions as panic sets in, margin calls are called in, shorts, are bought, they basically bought themselves in already, and then you get this big leg down. Usually it's 5 to 10%. And that is the bottoming process we need. Now, this time I was thinking it might be in the crypto space, but that's already been decimated. And so it may be something else, a financial services company, or, there was some rumors about Coinbase that turned out not to be true, but you need somebody's offside somewhere on a leveraged hedge position. You just don't know who it is yet. And they're big. And we're going to wake up in the next 10 days, 20 days, and you're going to find out they're a zero. That's a good thing. And I'm waiting for that to happen because we're getting close to a bottom here. No, it's hard to say. It's generally, it usually happens in financial services where somebody was trying some strategy, a leverage strategy. It's always leverage that does this. Yeah, a little bit. It's kind of a rear view mirror statement. But remember, you only have to go back to 2020, 2021, when the height of the pandemic was ripping through the economy and people had tremendous fear. And not only was the Fed, trying to be very accommodative, but we were also printing $4.5 trillion. And so it's not a big surprise that you would have inflation now. That's what happens when you run the printing presses. It's unprecedented to print that much money ever in the history of our economy. And so having some inflation. Now, the big question now is what portion of it is transitory? Let's take a hint from what happened with Target and Walmart. Half of their problems were supply chain issues, the wrong mix of product, and increased costs of transportation. So it wasn't that the consumer rolled over and didn't want to buy anything. That wasn't the issue. The issue was they really had increased costs. In the case of Target, an extra $1 billion+ in just transportation. And so that really is something that's transitory. That's not going to be around forever. And so you have to kind of put that into the cake when you're talking about 6 to 8% inflation. Maybe 4 to 5% of that is real, and the rest of it is short term. And the market's kind of waiting to see which quarter we start to see that wane a bit, maybe come down to 7, 6%. Yeah, that's for his scenario, it is, but I don't agree with that scenario at all. First, I would say, including anybody that wants to make forecasts about when the start of a recession happens, they simply don't know. And nobody knows right now because it's really hard to read the tea leaves in this market. And so the question that everybody, including me, has every day when I see a correction like this, when I see Walmart down 20%, for example, which is a bellwether stock, if I'm an opportunist, I might put on a position. But what I'm doing right now is I'm waiting. I'm waiting for the big event, as I call it. And you get these events, and we talked about it. That day will be an interesting day to put 130 or positions on. It'll be a day of panic. We'll be down somewhere between 2,000 and 3,000 points. And yeah, it's horrible to talk about it, but that actually is very healthy, very, very healthy. You get the PE of the market down into the 15 range, even lower. That's a tremendous buying opportunity. And I actually think earnings are going to be pretty good into the first and second quarter next year because we're still at full employment. And so, all of these concerns and the Armageddon scenarios, and these are putting pressure and compressing PEs, but I haven't seen the downturn of the consumer yet. And so you need to kind of see that. Everybody's forecasting it. That's true. Yeah, maybe. I mean, it kind of, if you try and, figure out the Fed's mandate and how they think before they make their moves, it's the definition of insanity, because at the end of the day, inflation is their number one mandate. But also, they know they have a delicate situation, try and attempt a soft landing. And what the Fed doesn't know, and what every other investor doesn't know, is how much of this inflation is real and how much is transitory. Remember, we've never had a global pandemic that's a rolling pandemic. Right now, if I were the Fed, I'd be looking at what's happening in China, which refuses to take Western vaccines and is constantly shutting down cities, millions of people locked in their homes. That is very unproductive. That damages supply chains. You heard it from the CEO of Target saying, this is killing us in terms of forecasting what we need into the back end of the year because our factories are shut down. And that's kind of unique to China. Most countries are willing to accept the abundance of Pfizer and Moderna vaccine, which actually works. The effectiveness of the Chinese vaccine, whatever that's called, is sort of 35%. So if you're only 35% effective, you're going to have rolling pandemics forever. I think this is actually a maturation process for the crypto market. There's two basic baskets of crypto projects. One, highly speculative tokens, and you could say UST and Luna certainly fit that because they've been repriced dramatically. Highly unlikely in the context of stable coins will they ever return to their old prices, because people have figured out a stable coin should be stable. And that means it has to be backed by something of asset value. You can note that USDC did not correct that way. In fact, during the period of this mass correction of other algorithmic or other quantitative or speculative stable coins that really got crushed, Circle, the company that issues USDC, was able to raise $200 million from Fidelity and $200 million from BlackRock. That's unprecedented in equity for the company. So that's signaling that that type of stable coin is favored by institutional investors versus the others, which look like they were retail products. So you've got all this speculative stuff. The NFTs have corrected. The Las Vegas side of crypto, no, it hasn't. I remain bullish on crypto from the perspective of productivity. And so I think if you're buying projects, and I've always said this, Bitcoin is not a coin, it's software. Ethereum software, Solana software, Helium software, Pollen is software. All of these different projects around different sectors of the economy. Solana may be better ultimately for transactional speed because Ethereum is pretty slow. So we don't know which one of these projects is going to win. But the whole premise is that you want these for financial services. And I still believe that in 10 years, crypto will be the 12th sector of the economy, but all the existing tokens will not exist. There'll be many that just go to zero because they were highly speculative, they were fun, they had no real intrinsic financial services value. But if you were to ask me about USDC and say, look, where's the value of that? Well, first of all, you can stake it or loan it at a 4% rolling annualized yield every 30 days, and that's valuable in inflationary times. It's a long way away. That's not what's going to happen first. I think what's going to happen first is we're going to see policy on stablecoins. And both the Haggerty bill and the Toomey bill are very clear about what they want in the regulatory environment on stablecoins. They want a 30-day audit in both cases, and they want all the underlying assets to have duration of less than 12 months. And that makes sense to me. And I think once they put that law into place, which is an easier bill to pass after the midterms, nothing's going to happen until after the midterms.